Good afternoon, folks. Welcome to the weekly economic update. It is Monday, August 22nd, 2022. I hope everybody had a good weekend out there. I guess I jinxed my Astros again when talking about them on Friday. But anyways, they did salvage the weekend series in Atlanta by squeaking out the game yesterday. They tried to give it up, unfortunately, but just kind of the way the Stros are these days. But they still got the best record in the American League, which makes me real happy. So anyways, like I said, hope everybody had a great weekend out there in the interwebs. And it was a pretty nice weekend here in Colorado. Had a little rain. It's starting to cool off. Let's see, what's the temperature outside right now? 70 degrees. It is darn right balmy. I guess if you're down in Texas, you're probably cursing me right now at the moment. So anyways, all right. If it's your first time watching, please hit the like, share, subscribe, all those good old thumbs up buttons. I greatly appreciate it. And let's go ahead and see how the markets did today. Let me bring up my screen here. All right. Let's kind of an ugly day across at least the U.S. indexes, and looking across the globe, it gets a little brighter as we get to Asia. So, all right. Dow Jones finished the day down 1.91%, closed at, which was 643 points, closed at 33,063. The S&P 500 was down 2.07%, closed at 4140. NASDAQ down 2.55%, closed at 12,381. Small caps are also down over 2%. The VIX today was up 15.53%, currently sitting at 2380. I think it was as high as 25 earlier in the afternoon. Moving on to the other indices here in the Americas, Canada down 0.68, Brazil down 0.72, Mexico down 0.98. Jumping across the Atlantic, Germany down 2.32, UK down 0.22. France down 1.8, Euro Stoxx was down 1.93, Netherlands down 1.18, Spain down 0.64, Italy down 1.64, and Switzerland down 0.64, and Portugal actually finished flat for the day, up slightly at up 0.09%. Moving further east, Russia, the MOEX was up 1.5, and the RTSI was up 0.28. Moving over to Asia, Japan was down 0.47, Australia down 0.95, New Zealand up 0.85. In the Chinese markets, the Shanghai was up 0.61, the SESE component up 1.19, the China A50 up 0.61, the DJ Shanghai up 0.61, and the Hang Seng down 0.59. And to finish things off, the Taiwan weighted was down 1.06%. So like I said, the Asian markets looked okay. It wasn't until you get over into Western Europe and then here in the States, things were just really ugly. So anyways, all right, well, let's read through this week's weekly economic update and see what news is there. The week on Wall Street, stocks tumbled on Friday, sending stocks to a weekly loss after an otherwise quiet August week of trading. The Dow Jones Industrial Average slipped 0.16%, while the S&P 500 lost 1.21%, NASDAQ declined 2.62%, and internationals fell 0.88%. The summer rally hits a pause button. The market rally that began mid-June paused last week. Despite the week's losses, stocks exhibited resiliency in the face of a string of troubling economic news that included flat retail sales, weak housing numbers, an inversion in the yield curve, and a tepid economic data out of China. Nevertheless, stocks tumbled on Friday amid hawkish comments about future rate hikes, rising bond yields, and ahead of the annual meeting of the global central bankers in Jackson Hole, Wyoming, in which Fed Chair Jerome Powell is scheduled to speak on August 26th, which I guess is Friday. Expect more rate hikes, and that's why the market's freaking out. They were hoping that the rate hikes were going to be in the rearview mirror, and that the Fed was going to pivot and either slow down or stop increasing rates altogether, which would be a boon for the stock market. But yeah, like I've been saying all summer, I don't see any data that would give us any reason to think that. But hey, I guess the financial journalists and the talking heads I don't know. All right. Expect more rate hikes. Minutes from the July FOMC meeting indicated that additional rate hikes would be needed to help manage inflation. Fed officials did acknowledge that further rate hikes risked unintended economic weakness because of the time it takes for higher rates to work through the economy. The committee indicated that they might slow rate hikes to determine the impact of previous rate increases. The minutes also contained the Fed's latest economic forecast, which projected inflation to decline faster than its June estimate due to a bigger economic slowdown in the year's second half. So economic data coming out this week. Tuesday, we have the Purchasing Managers Index composite flash and new home sales. Wednesday is durable goods orders. Thursday is jobless claims and gross domestic product. Handful of companies reporting earnings this week. Monday, today, we have Palo Alto Networks and Zoom. Tuesday, we have Intuit. Wednesday is NVIDIA, Salesforce, and Snowflake. And Thursday is Marvel Technology, Dollar General Corporation, Dell Technologies, and VMware. All right, so that's the weekly update. Again, don't be shocked by what's going on right now. This is kind of to be expected. I'm not sure who the people are out there who think things are rosy, but they're not paying attention. All right, let's read through today's market recap. S&P 500 slips as rising U.S. yields dent growth stocks. The S&P 500 slump Monday as growth sectors of the market, including tech and consumer, were under pressure from rising Treasury yields amid fears about Federal Reserve Chairman Jerome Powell delivering a hawkish surprise later this week. Again, who is surprised by increasing interest rates? Again, this has to be done. Tech stocks struggled to shake off pressure from rising Treasury yields, the enemy of stocks that have high valuations, as investors await fresh clues on monetary policy from the Federal Reserve at the central bank's annual Jackson Hole Symposium later this week. Quote, a more hawkish tone is likely to set the stage for a more aggressive rate move next month, while a softer, more dovish tone will expectedly reinvigorate hopes of a lesser size move, end quote, Stifel said in a note. Google parent Alphabet, Microsoft, and Meta platforms were down more than 2%. Netflix fell more than 6% after CFRA downgraded the stock to sell from hold and cut its price target on the stock to 238 from 345 on worries that the streaming giant's earnings will decline in the second half of the year. Ford Motor, meanwhile, dragged consumer stocks lower as the automaker was ordered to pay $1.7 billion to the family of Von Seal and Melvin Hill, who were killed in a fatal rollover of an F-250 pickup truck. The automaker said it would also slash 3,000 jobs in the U.S. and Canada. Energy was the relatively outperforming sector on the day, down about 0.5% as oil prices recovered losses after Saudi energy minister touted the prospect of major oil producers cutting costs to ensure that oil futures price reflect the current supply and demand fundamentals. APA, Coterra Energy were among the major gainers, while Occidental Petroleum declined more than 2% on reports that Warren Buffett's Berkshire Hathaway isn't considering a takeover despite increasing its stake to 50% in the oil major. In other news, meme-related stocks, including GameStop, AMC, and Bed Bath & Beyond, were also under pressure, with the latter down more than 38% as the company's new preferred share class began trading. Yeah, those meme stocks. Again, if you are one that visits Wall Street Bets on Reddit, I have seen some obscene losses from people trying to take advantage of some sort of squeeze or whatever manipulation they think they're seeing. But it's ugly. All right. Next up, here are 3 proven ways to get rich during a recession without having to risk a bunch of money to do it. And since some people say we're not in a recession, I'd say we probably are. I'm not going to get wound up in the semantics of it all. Things just aren't good. Let's just put it like that. Things aren't great right now. And, but there are ways to profit from the situation. So let's go ahead and read through this. Certain politicians have dismissed the idea that the U.S. is currently in a recession. But if you look up the textbook definition, it seems like we can't avoid using the R word anymore. A recession is defined as 2 consecutive quarters of real GDP contraction, and real GDP in the U.S. decreased at an annual rate of 1.6 in Q1, followed by a 0.9% decline in Q2. Recessions are prolonged downturns in economic activity, usually associated with falling retail sales, lower industrial production, declining wages, and higher unemployment. The good news, downturns also provide plenty of opportunities for regular people to build wealth. And that's what I've been trying to tell my clients. Yeah, it's going to stink for a little while. Yeah, it's going to, things will be flat or down for a bit, but there's opportunities out there. And, it's the downturns is where you make your profits in the future. It's not trying to guess right during an up market, because oftentimes you're just going to wind up chasing your tail or buying at the wrong time. But when everything's on, everything falls 50% and is at a huge discount, you really can't go wrong. All right. First up, stocks. Every investor wants to buy low and sell high. A stock market downturn during a recession might be an opportune time for bargain hunters. While the GDP contraction in Q1 and Q2 wasn't too severe, stocks have already fallen by a lot. The S&P 500 is down about 20% in the first 6 months of 2022, marking its worst first half performance since 1970. Investors who want to scoop up shares on the cheap might want to be cautious and focus on companies that can thrive during a recession. Let me stop there. Usually your best bet, well, I don't want to say best bet. This is not, financial advice that anyone should go out and take, but just, looking at it from, the big picture point of view, typically your dividend stocks perform better during downturns. And I learned this, it's probably 2008, from one of my mentors back at Ameriprise was, when things get ugly, your best, one of your best options to take is to look at dividend producing stocks that have steady dividends or rising dividends, and, get paid to wait while the market is crappy. Hey, it's not a bad idea. And it worked pretty well for me and my clients back during the last major downturn. Investors who want to, I read that. Warren Buffett, for instance, loaded up on shares of food giant Kraft Foods, which later merged with Heinz to create Kraft Heinz, and electric utility NRG during the Great Recession of 2008. According to Hartford Funds, the S&P 500 actually gained 3.7% on average during the 13 recessions since 1945. You don't need a lot of cash to start investing. Some investing apps even allow you to buy fractions of shares with as much money as you're willing to spend. Next is real estate. Real estate offers another potentially lucrative opportunity during a recession. A recession doesn't necessarily mean we're going to see a drop in property prices, but one specific factor could deter upward momentum in the real estate market, and that's interest rates. Right now, the Fed is raising its benchmark interest rate aggressively to tame spiking inflation. Higher interest rates are bad news for real estate. When the cost of borrowing is high, it makes people think twice about getting a loan to purchase a home or an investment property. Real estate mogul Sam Zell, also known as the grave dancer, that's in quotes, made a fortune from buying properties when no one else wanted to. In 1973, when the economy fell into recession, the real estate market tumbled as many loans went into default. In that environment, Zell was able to acquire a portfolio of high-quality properties at a significant discount. If you've been eyeing investment properties in recent years, a recession-driven pullback in prices might provide a good entry point. These days, new services make it easy for you to get into the real estate game, no matter how big or small your budget is. Last is starting your own business. Not everyone wants to start their own business, but according to The Economist, 47% of millionaires are business owners. Being an entrepreneur is not easy. I can attest to that. And the idea of building a business in a recession, whether other businesses might be shutting down, can seem daunting. But going against the herd has its advantages. Quote, right now is the time to take advantage of an open field. Your competitors are pulling back, spending less money on marketing and advertising, says Charles Gaudet, CEO of business consultant and coaching agency Predictable Profits. Quote, some started laying off employees. Others are content to sit tight and hope for the best, end quote. When there's less competition, you have a better chance of establishing a position in the market. Of course, if you're not ready to quit your job and go all in on a business idea just yet, think about starting a side hustle first. There's no magic formula to getting rich quickly, whether it's investing in stocks, real estate, or starting your own business. It's important to do your own research and evaluate your financial situation first. All good ideas, because I forget where I heard this quote. Profits are made when there's blood in the streets. And when people are killing each other, that's the time to, and there's carnage and mayhem. That's usually when you get your best deals. So certainly don't let it get you down. If you see some opportunities out there, give me a call. I'd be happy to evaluate whether or not it's a good deal or a stupid idea. So I won't use the word stupid, but I will let someone know if it may be a harebrained idea or if it's something worth considering. All right, and last article here has to do with some estate planning. Always make sure that everything is written down and lined out the way you want it, because then you wind up in situations like this. My mother-in-law left her $1 million life insurance policy to my brother-in-law, but her will says she wants him to share it with my husband. What can we do? Starts out with the person telling her side of the story. Dear Quentin, my husband and I took care of my mother-in-law for 8 years. Around 5 years ago, we gave up the house we were renting to save her home because she couldn't afford it. And because she could no longer live alone, we ended up taking out a loan to buy her house. It was not gifted, and we did not incur her debt. Instead, we paid what the house was appraised for. My mother-in-law passed in February, and the only thing that she said for her two sons that she had for her two sons was a life insurance plan worth $1 million. She added only my brother-in-law as beneficiary. See, there was the mistake. But stated in her will that he is to share it with his brother. My brother-in-law says we inherited the house even though we paid full price for it and took care of her without his help. Is there anything more we can do so my husband can get what his mother wanted him to have? Unlucky in Tennessee. And here's the response. Dear Unlucky, your brother-in-law is on sound ground, legally, if not ethically. In most cases, the beneficiary designation on a life insurance policy trumps a will. That is true. And again, I'm not a lawyer. I've read through and I've read through enough estate law and how this stuff works. The beneficiary has nothing to do with what the will says. The will is only for assets that do not have beneficiary designations on them. So, for example, say this phone. If, I have beneficiary designations for all my accounts and my policies, but, I really want my phone to go to one of my kids. And because that's just real property, that's the type of thing you would put in a will to say, all right, my will or my phone, my car, my guns, whatever the case may be. That's where you outline things that don't have beneficiary designations. So far, I don't think this lady's going to get what she wants. The former is the beneficiary designation on a life insurance policy trumps a will. The former is a legal contract between the holder of the policy and the insurance company. It's a cautionary tale for anyone out there with a life insurance policy to change beneficiaries to align with their wishes. It's likely that your brother-in-law is well aware that you purchased your mother-in-law's house and that any profit she made was deposited into her bank account and used for her care. It never hurts to put such transactions down in black and white, seeing that that may or may not change his opinion. Quote, you've got the house, in quotes, gives him an easy, if not convincing, out. However, it's possible to overturn a life insurance beneficiary designation if it explicitly goes against the terms of a divorce decree. In the Supreme Court case of Sven v. Millen, the children of the deceased were awarded the proceeds from a life insurance policy, not the ex-wife who was named as beneficiary on the agreement. The law presumed that what her ex-husband wanted after the divorce was incorrect. The ruling stated, thus, if a person designates a spouse as a life insurance beneficiary and later gets divorced, Minnesota law provides that the beneficiary designation is automatically revoked. At least 28 other states have enacted similar revocation upon divorce statutes. You and your husband are, on the other hand, probably out of luck and must rely on the discretion of your brother-in-law. It sounds like he's either disgruntled with the way you handled the property purchase and or he knows that the $1 million insurance policy belongs to him regardless of the will, and he's already dreaming up plans to spend the money. All right. So again, that's a cautionary tale. If you want things to go a certain way, once you pass on, you need to put it in writing. And if it's, contracts such as a life insurance policy, an annuity, or even, investment accounts, make sure that the beneficiary designations are outlined the way you want them. And otherwise, you're going to wind up in a situation like this where it's, he said, she said, and even though the will says one thing, there's really not much else you can do there. So Anyways, and that's something I usually do at the end of the year with clients as I'm having my end of year meetings, go through all the beneficiary designations on accounts, make sure that nothing has changed. No, you don't dislike your kids or grandkids at that point. And, make sure that, if something bad were to happen before the next time we reevaluate it, that it's the way you want it. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. And I'll be back tomorrow with the Liberty Call with whatever news has jumped up in the last 24 hours. So hope everyone has a fantastic evening, and I'll talk to you then. Bye.